Hey everyone, welcome back to Corporate Decoder, the place where we uncover the real juicy bits hidden in corporate filings. And today we've got Morningstar Inc. serving up some looks at their latest report. Let's just say this filing might have a few secrets up its sleeve. Before we dive in, if you love these kinds of unvarnished looks at company performance and want more, hit that subscribe button. And if you are looking to connect with fellow dissectors of corporate news, join our Discord community. The link is in the description below. Alright, so Morningstar Inc. just dropped its latest Form 8K, which is basically a current report filed with the Securities and Exchange Commission, or CC for short. Think of it as a company flashing a signal flare when something significant happens. In this case, it is all about sharing investor questions that came in and the company's official responses. The main event here is what is called Regulation FD disclosure. Now, Regulation FD, or Fair Disclosure, is a rule by the SEC designed to make sure that when a company releases important information, it is shared with everyone at the same time, not just a select few. So this filing is basically Morningstar saying, hey, here is that info we promised to share with everyone. In response to questions from investors, it includes an investor Q&A that is attached as an exhibit, giving us a peek into what investors are asking and how Morningstar is answering. Now, before we get into the nitty-gritty of the Q&A itself, which we'll get to in a bit, Morningstar, like most companies, always includes a section about forward-looking statements. This is super important because it is basically their legal disclaimer. They're telling us that anything they say about the future, like their plans or expectations, is based on their current beliefs and might not actually happen. They use words like will, expect, plan, and potential to describe these future possibilities. The key takeaway here is that there is a whole list of things that could go wrong, and they're laying them all out. They mention potential issues with acquiring something called CRSP Incorporated or CRSP Inc., making sure their brand stays strong, and protecting against cyber attacks. They're also worried about economic ups and downs, changes in laws that affect their regulated businesses, keeping their products fresh and meeting client needs, and even the impact of artificial intelligence on their business. And that is just scratching the surface. They're also concerned about errors in their products, keeping good employees, managing costs as they grow, and the risks that come with using automated tools. They're really laying it all out, aren't they? One of the big worries is about their investments. They want to make sure that when they buy other companies or invest in new technologies, it actually pays off. If these big moves don't bring in the expected money or business benefits, it could really hurt their earnings and their ability to give shareholders a good return. This shows they're thinking about growth, but also the risks that come with trying to achieve it through buying and merging. Another significant point is their liability concerning the vast amounts of data they handle. Morningstar deals with a ton of financial information, so any mistakes in how they collect, store, or share that data, or in the reports their software generates, could lead to serious legal trouble and damage their reputation. They're basically acknowledging that with great data comes great responsibility and the potential for significant fallout if they mess up. And for anyone who has ever dealt with taxes, you know it can be a headache. Morningstar operates globally, so they're pointing out that navigating all the different tax rules in various countries is a real challenge. Complications with taxes could directly impact how much money they owe and what their tax rate is potentially eating into their profits. This highlights the global nature of their business and the less exciting but crucial back office complexities they face. Okay, so that is the high-level overview of the risks and what the filing is generally about. Now remember, this specific filing, an 8K, is primarily for reporting material events, and the main material event here is the dissemination of this investor Q&A. While there aren't any direct financial tables in this particular 8K itself, the questions and answers within the Exhibit 99.1 likely touch upon financial performance and strategic outlook. We are looking at a report as of the 25th of November 2025. The investor Q&A is really the heart of this filing. While we don't have the specific Q&A text here in our document, we know it contains questions from investors and Morningstar's responses. These likely cover everything from revenue streams and profitability to their growth strategies and how they're navigating the current market. The fact that they are publicizing these answers under regulation, FD, means investors are asking about things that management believes are important for the market to understand. Now, if Morningstar's financials were directly presented here in a table, we'd be digging into numbers like revenue growth, profitability margins, and balance sheet strength. Wednesday compare those numbers to previous periods to see if they're improving or declining. For example, if we saw revenue was up 10%, we'd want to understand if that is coming from new customers, higher prices, or expanding services. If profits were down, we'd look for reasons like rising costs or increased competition. The best reports, like those from a Warren Buffett-style investor, would show how these numbers translate into the actual value of the business. However, since this filing focuses on the Q&A, The financial insights are embedded within those exchanges. The questions investors pose often revolve around the company's financial health and future performance. For instance, if investors are asking about the impact of rising interest rates on their fee-based revenue or how a specific acquisition is contributing to their top line, those answers would indirectly reveal critical financial information and strategic direction. We'd look for concrete numbers or clear trends discussed in those answers to understand if Morningstar is winning or losing in the market. This report is also formatted in a way that is machine readable, which is great for automating analysis. It uses something called inline XBRL, which essentially embeds structured financial data directly into the web page. This makes it easier for computers and software to extract and understand the financial information, making these reports more accessible to analysts and investors alike. Now, let's move to my breakdown of where Morningstar stands based on what we've seen. Morningstar is clearly a company that knows its business and its risks. They are strong in their core areas of providing data and analytics to investors and financial professionals. Their brand is well respected, and they are proactive in warning about challenges, which is a good sign of transparency. However, their heavy reliance on acquisitions for growth, as hinted at by the concerns around the QRSP deal, presents a notable risk. Not all acquisitions pan out as expected, and integrating new businesses can be complex and costly. The sheer scope of risks they outline, from cybersecurity to regulatory changes and the impact of AI, shows they are operating in a rapidly evolving and sometimes volatile landscape. This is not unique to Morningstar, but it means they have to be constantly vigilant and adaptable. The concerns about data liability are also significant in today's data-driven world, and any missteps there could be very damaging. Overall, Morningstar appears to be a resilient company that is aware of the hurdles it faces. Its strength lies in its established position and its commitment to transparency about potential challenges. The key for them will be executing their growth strategies effectively, particularly through their acquisitions, and managing the inherent risks in the financial information services industry. Alright, that is our quick decode of Morningstar's latest filing. What is your take on the risks they're highlighting and what it means for the company's future? Let me know in the comments below. If you found this breakdown useful, please hit that like button and subscribe for more deep dives into corporate secrets. And don't forget to join our Discord community, linked in the description for more discussions. Thanks for watching. See you next time.